Hey everybody, welcome to Froggy Stocks. Not that I say is financial advice, entertainment purposes only. I'm not a financial advisor. Hycroft mine, back at it again. We used our Hoyles method for the past couple weeks to try and plan the next dip buy, which we got at $1. Loaded up as much as I could. Sitting around $1.25 average now, which I'm really liking. The real play here that I think people are missing, and all the FUD spreaders like Pat Rock and Amy and all these clowns who think they know what they're doing and they don't. They definitely don't know what they're doing. They're missing this. Hycroft Mine had an amazing amount of short interest before the recent share offering. Fintel was reporting over 98%. Ortex was reporting over 45%. And Yahoo was reporting over 1,000. We all know Eric Sprott is very vocal and active, even before the meme craze started, about naked shorting and protecting Canadian mining companies. He's got multiple videos out about it. We've covered that. He does not like short sellers. You know the history with Adam Aaron and AMC. We do not like short sellers. We're fighting the system. And Mudrick, who has in the past helped Adam Aaron with financing for AMC, right? So now we have the big three: Mudrick, Sprott, and AMC Theaters. AMC and Sprott together own over 100 million shares, right? The float right now for Hycroft is 198 million. Then you have Mudrick on the backside with another 37, 38 million shares. They own well over 60% of the company. But here's the kicker. This is how the VW squeeze happened. The biggest short squeeze in history occurred in '08 when Porsche embarked on an unexpected series of maneuvers that left controlling a huge percentage of Volkswagen stock. No options May, no options to November. VW and Porsche came in and started buying out these shares like nobody's business, right? Which consolidated ownership into one platform to where people couldn't lend out shares to short anymore. It trapped the short sellers in a massive squeeze scenario, biggest squeeze scenario in history. That's what Sprott, Mudrick, and AMC just did. They bought the majority of the shares available at the current time when the float was only 68 million. The reason Hycroft authorized another 1.4 billion shares, not issued, authorized, that means they're not out in the float or outstanding, is so when Sprott and AMC and Mudrick or any other big name investors, say like Elon Musk gets a wild hair up his ass and wants to buy Hycroft, which is 3 hours away from Tesla Giga Nevada. Those shares are already ready to go. They can make an immediate sale to another big buyer or to Sprott or to AMC or to Mudrick. Those shares are already voted on and ready to go in the treasury to sell at the market, right? So that's another scenario. One of the big three come back in. They all buy more shares. They control over 70% of the float. And if they do, in which they do, they control more shares than are out on loan currently. They can force a recall. They can do so many things with this to turn it into a VW squeeze, you guys. I absolutely love everything they're doing with it. Diane Garrett just put out a new video talking about operations improving, what they're looking for in the future, still wearing her rocket pin. And then we have this, the warrants, up to 94.3 million shares of common stock issuable upon exercise of the warrants, up to 71.2 million shares of common stock, up to 60 million warrants, right? So that's what it's saying. All these shares are available upon the exercising of these warrants at said prices. Exercise price of $11.50 per share and exercise price of $10.50 per share. The reason they set these prices so high when these companies exercise is they know it's going to be well above that in the future when the squeeze happens. And what it's going to do, AMC and Sprott and Mudrick came in, saved the company, got them set up, brought retail in with them. They're getting back to full-scale operations. The way to say thank you is to give them the availability of these warrants at a price that is going to be much cheaper than the squeeze price when this happens. That is their reward. They can come in, exercise these warrants, turn around, sell the exercise shares and still maintain their position in the company to make sure it succeeds. The amount of money they're going to make off this is insane. If Hycroft goes to $10 per share, AMC has made a $400 million investment. This is why I am in deep on this. I still have over 1,000 shares of AMC. I bought 30 shares of GameStop a couple days ago because I believe in every single one of the plays. But I think Hycroft is going to be the one to launch this freaking rocket, and it's going to be soon. I cannot wait. As soon as Hycroft starts making any traction back over $3, shorts are going to start getting squeezed. People are going to see it. We're going to get FOMO. Everybody's going to jump into the play. And then I think they will announce another big purchase by one of the big three or another good outside investor that doesn't have any bad ulterior motives. So in that, we've got the ownership, which Fintel finally updated. For some reason, none of these reporting agencies wanted to have the proper information on Hycroft Mine, which drove me nuts. The SEC a few days ago for the second half of April FTDs didn't even post them until 3 days later because they posted the wrong file until Ortex challenged them on it. It's absolutely insane. They know Hycroft is going to squeeze. Read about the VW squeeze, then go back and look at what happened with Sprott and AMC and Mudrick buying into the company, right? How that happened, the process of it, why they authorized the 1.4 billion shares for future sales. Look at the warrants, the price action on exercising these warrants, what they're going to get for it, and where we'll sit float versus ownership versus short interest in the future. And then, like I said, the chart to me looks absolutely phenomenal. It looks like we should have broke out here on April 14th. There was a ton of fuckery because they blew up the options chain, stole everybody's premiums, took them right out from under their feet. Retail lost a lot of money. They used that money and FTD generation to short us back down. We had another good run to $1.90, which we called using the Hoyles method. I said, this is our next price. The highest, the lowest strike price on the, highest open interest on the lowest strike price, which we called to a fucking T. People got in down at 120, sold some shares at $1.90, made some profit, and bought back in at $1. If you followed these videos and you followed our Twitter posts and our space calls where we talk about it. Now we are getting ready for another scenario where we're going to test $1.90, $2, or $2.50 again this week. The problem is the institutions are coming in and juicing up the call options chain below $2 to try to bait retail in to either the put side or the call side. And what they're going to do once their algos realize that there is enough retail money in the options chain, they will flip their puts and calls to benefit their position on the downside. They will rip out everybody's premiums once they're below max pain, which isn't even a big deal anymore. Max pain is a good indicator to start your research at, but you want to use Hoyles, which is the highest open interest on the lowest strike, for retail to be in on the call chain, which is the most beneficial strike price for market makers to get the price below to steal those premiums. So we have that. This week, there was massive open interest on the calls out to $2.50. I am noticing more calls are being picked up at $2 and $1, which I think is market makers trying to bait people in. I'm still very bullish for this week. We're having a nice turnaround Tuesday. Wednesday, Thursday are usually the days where they rebalance the options chain to try to benefit themselves, to stop any upward movement, and to steal people's premiums. So if anything, my goal still is no options to November. We have multiple people agreeing with this. Some of the people who don't agree with it because the way they get in their engagement is the flashy options. This is what I'm jumping into and jumping out of every day. That is good and it makes you money, and I understand options. Stop trying to discredit this community for no options May by saying we don't understand. That's a total Gasparino, Jim Cramer attitude. We know what's going on. We're staying out of meme stock options because we don't want to give any incentive for the market makers to manipulate the price to steal premiums. That's the whole point. It ruins the FTD game, it ruins the premium game, and it ruins their price fixing. We're taking their chessboard away. This is the scenario. Say we're retail, we can't play chess because we don't have all the chess pieces. We're playing the market maker who has all their pieces. What we're doing is we're flipping the chessboard and putting them back into a game of checkers where everybody has all the same pieces, all the same information, and all the same possibilities, right? We are leveling the playing field by not playing the meme stock options chain. Payment for order flow paid more for options flow in 2021 than anything else in the market. It is a proven fact. There's multiple sources I've put out for this. It's super important that we stop feeding the beast. I love where GameStop is. I love where Hycroft is. I love where AMC is. The IWM is making a beautiful recovery. I'm hoping this is the bottom. I had predicted 166, which is my red line here, which is the bottom of our recent run to 243, but it was the top of the pre-pandemic crash highs that we double tapped over a period of almost a year. The market had to do something anyways, and what they did was they crashed it. They injected retail investors with trillions of dollars from the government via stimulus checks to make it recover, and that's why we got this exponential run up here to 243. We are recovering from that, just like it was a one. Look, we'll go to the month chart. One big green fucking candle. We're doing a gap fill. We bounced 168. I am hoping we don't have any further negative catalysts that affect us in any type of crash scenario, but we are recovering from the pre-pandemic high double top. I'm hoping this is our new support, right? Look at that. I was $2 off. So if we are starting a true reversal, that means Hycroft was looking good to begin with. AMC, which Hycroft's not part of the IWM, but I'm using the IWM because AMC is moving the market. AMC is definitely moving the entire stock market. We're going to come out of this year-long descending wedge on AMC and finally have a true breakout. The $34 thing here was a fake out breakout because I believe somebody came in, covered their shorts. This was right around the time Melvin Capital went out of business. I think a week or two after that, they announced they were closing down the fund. I believe they might have closed their shorts on the IWM, and that's why the AMC price move. Citadel came back in, or Susquehanna came back in, bought them shorts back out, crushed the stock down to our new low at 970, which is exactly almost where we were sitting back before our last run, last May through June, which we're sitting on again right now in almost the same scenario. So super excited, guys. You got the Hycroft deal. You got the AMC deal. GME has the stock dividend split coming out. Super excited for it. I think it's going to be a major catalyst for the whole market. And I wanted to announce a new plan. I had a new theory where I think AMC and Adam Aaron should drop $40 million out of the war chest to buy GME stock in a lump sum right before the GME stock split dividend issuance. It would give AMC a ton of GME shares. It would be a $40 million cash injection into GME. It would put a huge pinch on the shorts, and it would create intercompany symbiosis. AMC protects GameStop. GameStop protects AMC. Fusion. Ha! It's a perfect scenario for this to happen. Anyways, that's all I got for you today. I hope you guys have a very, very good week. I might jump back in Thursday, Friday to talk more about the Hoyles method and options. Make sure you go get tacos tomorrow and have a good week. And don't do anything I wouldn't do. Froggy Stunks out.